All right, futures suggest a modest downside move at the opening bell this Tuesday morning. David Nicholas is our market watcher this Tuesday, and he's with us today. Now, David, you brought some stock picks with you, and I want to go through them quickly. Let's start with Exxon. Where do you see it going?
Well, if you take a name like Exxon, this is the name that we own at our firm. We've been buying more of it on dips. Look, I think this is a great way to get a name that's going to increase its dividend over time. It's paying a 3.5% dividend. That may not excite a lot of our viewers, but it's the growth of the dividend. Energy companies right now are some of the most profitable companies in the world. So this is a name that you can buy today with great long-term outlook, Stuart.
Okay, Exxon delivers 3.5% dividend yield. Next one, Coca-Cola. Why do you like it?
Right.
Where's it going?
So Coca-Cola is an Atlanta-based company. It's a staple, Stuart. Anytime the stock trades down with it's equivalent to a 3% dividend, which is it is now, it's always been a good buy. Coke is extremely profitable, 60% profit margin. So this is a name. If we see some slowing in the economy, Coca-Cola will continue to print profits. So we think it's a great buy at this level.
It's $61 a share now. Where does it go to?
I think we could at least see another 10% upside from here, 66, 67 range, while you're getting that 3% dividend.
Okay, Wendy's is your number 3 pick.
That's right. This is one that we may not have talked a lot about. It's trading at a discount based on its historical average. But here's what's interesting about Wendy's, Stuart. It's actually introducing AI into its menu ordering. So they're testing when you drive up to Wendy's that AI will take your order so that its workers can focus on the food preparation. So it's a great name, 8% growth in year over year for same store sales growth. And it pays a 4.5% dividend, so we think it's a good buy.
See, I'm listening to all of this, and there's a modest dividend payment, there's a modest upside move. It's just not as exciting as the good old days, is it? When you could look at NVIDIA go up $80 in a day, or Microsoft goes up $10. I guess we've got to be prepared to accept lesser gains in the future. Would you agree with that?
Well, sir, we've had a great run, but there are some signs that the party's coming to an end. If you just look at the consumer, right? Consumer sales are down 4 out of 6 months. Consumer spending is down. If you look at consumer excess savings, American savings are down from $2.5 trillion down to $700 billion. Americans are spending that savings at about $100 billion per month. So if you look at that rate, Americans could be completely out of money by the end of this year. So the consumer is great today because you have strong employment, you have good savings. But as we go into next year, that could spell trouble for the consumer, which is why we don't want to sell our stocks. But this is the time to start adding some defensive names to our portfolio that pay some nice dividends along the way.
Okay, David Nicholas, not going to set the world on fire, but steady as she goes will be pretty good. David, thanks for being with us. We appreciate it. Thanks very much.